Hi everyone, I'm Ken from Crypto Trading KS. Everything I do for you is free. If you're new, welcome, and welcome back to our regular community. Twice a day, 7 days a week, I share my experience as a full-time crypto trader. My goal is to assist you to be more of a financial blessing to yourself and those you love. Let's run the numbers. Bitcoin is currently trading at 34,534, down 3.56%. Ethereum trading at 22.26, up 2.6%. We see USDC, DAI, USDT, BUSD. They're the stable coins. We're always interested in seeing if these are green or red, especially USDT because it's the largest. If this is green, it means that money is coming out of the crypto market into the stable coin. If it is red, it means it's going the other way. Many community members asked me if I could take them through drawing structural support and structural resistance. I put episode 93 together on that to help everyone out. I'll be doing a little bit more on that drawing and interpretation later on in this particular episode. Over the many years I've been trading, I've accumulated hundreds, actually over 1,000 rules. It's every time I accumulate a rule, it's pretty much witnessed because of losses or some mistake that has been made in the market. All traders and investors lose money. That is normal, and that's nothing to be concerned about. The key is when you lose, don't lose the lesson. I've scattered some more rules actually throughout this episode. If you watch to the end, you'll get them all. And it's more important that you understand how to apply one of these rules rather than what the words mean. Understanding is critical. When you lose, don't lose the lesson is all about never stopping learning because life never stops teaching. Sometimes we get into a problem where we know that we're correct and we don't want to be wrong. In many ways, it's hard to be wrong. It feels like an attack on your ego or self-esteem. Don't worry about those things. The market is independent of those things. It's really trying to teach you through your losses. Everybody makes a loss. That's fine. When you become a consistently profitable trader, you manage your losses and you become more and more profitable. It's a different mindset, but the key is being open to learning. We always do a quick sentiment analysis of the news. We're looking for headlines. Risk of investing in Bitcoin, risk, negative. Starts Bitcoin trading, positive. Pays out in crypto, positive. Launches crypto app store, positive. Bitcoin is not a bubble, positive. Bridging the gap, can't tell from the headline. So we put this as neutral. This the best period to buy, question mark, don't know, don't want to read it, too busy. Next, so they're both neutral, two neutrals. BlockFi rate cut on Bitcoin deposits. Well, that doesn't sound good. Become the first car to mine cryptocurrency. Well, that's pretty cool. Crypto raises 25 million. That's positive. We have 7 positives, 2 neutral, or more point 2 that we would have to read, and we're not going to do that. We're too busy, and 1 negative. So this shows that the news today is fairly positive by nature. Many years ago, I didn't zoom out. I just focused on what I wanted to trade, and I didn't give too much consideration to the general market. Now, decades later, I look at zooming out as the first thing that I do. And because I want to share my experience with you, and I want you to be more of a financial blessing to yourself and others, we always start by zooming out. These rules, each rule that you come across is hard won by. Each rule has cost real money. I'm sharing these because I really want you to avoid as many losses as you can possibly do and get as much gain as you can. Let's look at zooming out. In order to zoom out, we need to understand Bitcoin's price history and how it relates to the current market conditions. We use the KSModel, which is a Bitcoin technical trading model based on institutional price psychology. Institutions have very long investment horizons, and they are not influenced by the news. Actually, institutions pay for news to be created. Retail investors read the news and can get very concerned about price fluctuation. We understand that we're in the bull market cycle after the halving. The bull market, the sun has come out, psychological sunlight is shining. We have a few targets to move towards. Some people in the community have said, how can Bitcoin possibly reach those targets? Bitcoin is an exponential asset. You only have to look back at certain price behavior to see that it is very possible to do. There are quite a few other reasons why those dots are realistic, but we'll go into that later. For sustained growth in any venture, any business, any area, any market, it needs to be growing at a specific rate. The technological adoption of crypto is very fast. It's actually faster than the internet. This is why institutions have this long time horizon, decades out, and they know they're safe in their investment. They're accumulating. Now that we've got a macro view, let's zoom in. We look at Bitcoin's price action. We can see in episode 94, we were trading around 34,569. The current price of Bitcoin is 34,329. It's really bumping up against this structural support. That is an important line for us to hold. Even if we don't hold it, even if we get some degree of sell-off, we've got another really good structural support line at 32,414. Now, why is that good? It is good because we have a low. This is another low, but it would be a higher low. If we put in a higher low around 32,054, that is 100% healthy. These cryptos need time to accumulate momentum and power. It is no problem. Psychological resistance of 35,000 is still in play. We really want to get above this resistance level at 36,171 and start challenging this resistance level up here at 37,230. Looking at the price action here, we can see Bitcoin has recently sold off and is testing this structural support. We would expect the longs and shorts to reflect this fact. Looking at the longs and shorts, we can see the shorts here in red. They are decreasing, but we're starting to see a bit of an uptick. We can see the longs, they're increasing, but there's also an uptick. This is really good. The longs and shorts are battling it out. I had a question from a community member. How do you draw this chart? This chart is Bitcoin's price action with a comparison of BTC USD longs and BTC USD shorts on a new scale. I hope that helps. Returning to Bitcoin, if there are high liquidations involved in sell-offs, we tend to think of that as more significant than if there are lower liquidation levels. Let's have a look at the liquidations. Over the past 24 hours, we've had 332 million in liquidation. 71,985 traders were liquidated. 332 is below the average of around 500, so we're not really too worried. In the last hour, 96% roughly of liquidations were long, and we can see this up here. We can see the longs have been liquidated. Before the shorts were getting liquidated, now the longs. It's all yin and yang. They all price moves in waves, and this is primarily why. We're always interested in looking into the engine of crypto. Net realized profit and loss, this red here, it simply means people have taken a lot of heavy losses and they're sitting on those positions. That means typically a floor has been put in on the price, a low has been reached. We always need more data to confirm anything. Tether is a stable coin. Its balance on exchanges is increasing here. When it increased last time, the price went up because Tether is then deployed into cryptos, Bitcoin and all other cryptos. If we look at the stablecoin supply ratio, what we see here is Tether and stablecoins are being converted into Bitcoin. This sort of leg up here tells us that. What I like to do for you is try and combine as many possible data sources on one source. The fear and greed index today is 28. It was 28 yesterday as well. This is the current big spike up in USDT stablecoin balance on all exchanges of around 4.03 billion. This was the previous spike that you saw around 3.9 billion. We've also added in Google searches thanks to Maxim, and a couple of community members have actually reached out to me and said we can search other terms as well. I really appreciate the feedback. Anything that we can do better as a community day by day, please let me know. It's really, really good. I'm here to help you. Anything I can do to make that a reality, that you can become a financial blessing to others and yourself. That's a beautiful mission. Let's do it together. We can see here we haven't really had any significant liquidations except for that sell-off. Extreme fear, which registered around this time and recently around here, has been declining just to fear now. They all point to good positive action. Heading to the top 7 in the market, Bitcoin, Ethereum, Tether, Binance Coin, Cardano, Doge, and XRP. Let's have a look. The top 24-hour percent gainers are Swissborg, Compound, Maker, Telcoin, XDC, Luna, and UMA. I'm going to go through Compound as an addition at the end of this video. Let's turn to the 24-hour percent losses. Filecoin, Internet Computer, Celo, Zen, Theta, Qtum, and SHIB. Let's have a look at the 7-day percent gainers. Compound, XDC, ETC, Bitcoin Gold, ICP, Elron, and Qtum. Let's go the other way. Greatest losses over 7 days, T-Fuel, AMP, Matic, Graph, FDM, NEAR, and Rev. I've slightly altered the Binance derivatives analysis because I think it's more helpful to you just after the full market analysis. We always, as part of my personal trading edge, I always look at this to understand how things may be moving under the crypto market engine. 24-hour trading volume is 64.8 billion, 24-hour open interest 5.7 billion. I'm really interested in the change of the price of the derivatives contract in the past 24 hours. Let's have a look through the crypto market under the engine. We can see Ethereum. we can see Ethereum is healthier than Bitcoin. How do we know that? This is negative 4%. This is positive 2%. Let's continue down. There's a lot of negatives in the market, not much positive. That was quite reversed on the previous episode. Look at Axie Infinity, AXS, doing well. Compound is also good. This is the one I will show you later in terms of drawing up lines. NKR doing well. It's good to just keep an eye on this. We keep an eye on this twice per day. Just look at your favorite coin and how it might be doing and keep an eye on things. That's always the trick. The zooming out process is really important before you look at your favorite coin. Everything that I do for you is aimed at setting up the process so you can see more and then you have greater context with what you're doing. We look at crypto total market cap because this is almost the average aggregation of every single coin in the crypto space. We're interested if something is above or below structural support or resistance. We're interested in the trend lines, the fresh air above the trend lines. We always know price is moving in a wave, so we're never concerned about that. We really look for consolidations and liftoffs, and I'll cover those in more detail later. Current total market crypto, total market cap, what a mouthful, is 1.4 trillion. We can see some resistance up here, but we know this is just Bitcoin's fingerprint. We know what we're looking at. Before we get into the alts, let's just look at Bitcoin's fingerprint. We have a McDonald's here. we have a W, and this, as a statistician, looks like a normal distribution curve to me. It could look like a bell, it could look like a reflection of a Viking longship. Please let me know in the comments what you think this whole thing looks like. The more you make it your own, the more you can actually see it in the patterns of your coins. It's really valuable for you to do. Let's get into Ethereum. The first thing I'd like to draw your attention to is the McDonald's. See how it's kind of squashed? The upward W, and you know that normal distribution? Look at this. This is showing power. This is exactly what we want. We know Bitcoin is selling off at the moment, so we're not concerned about this. But this is power. This is really cool stuff. Ethereum currently trading at 21.98. It's really very close to the support of 21.78. There's also support below at 2100 and 2020, resistance above at 2304 and 2387. Let's turn to Binance Coin. You see that McDonald's trading out quite well. You see the W is squashed. The normal distribution has broken down here. It's like reflected but broken down. But that uptick is really good. We always want to see this power. Very healthy. Note this structural resistance around the 358 mark. Currently Binance Coin is trading at 295.53. It's above structural support at 291.52 and above support at 278 and another level of structural support below at 264.75. Critical thing is structural resistance at 358. Immediate resistance lines are 309, 318 and 327. Let's have a look at ADA Cardano. We see the McDonald's sign. Thank you very much to the community member who pointed that out. I think it's really cool. We can see that upward slanting W. We can see the Viking longship getting reflected, but the reflection broke down here, or like a normal distribution or a bell. Let me know what you think that is. It's always good to try and figure these patterns out. We saw weakness here, but strength there. ADA is trying to party. ADA is currently trading at 134.89, just above its support at 133.43 and 128.48. It has resistance above at 140 and psychological resistance at 150. I'd like to share Rule 212. This is a really hard rule to bear. Markets demand the tuition fee of losses. When people commence investing or trading, it's very normal that they do their best, but they don't quite know what they're doing. It's like when you take anything new, you take time to acquire knowledge, and then eventually that knowledge becomes unconscious, and you just have an unconscious capability. Rule 212 is a understanding that if you have a loss, don't worry about it. Think about it and reframe it simply as a tuition fee that you're paying for your education in the market. What you want to do is you really want to minimize these tuition fees as much as humanly possible. When I share my rules, I've paid so much money in tuition fees. I want you to avoid that. That's why I share these rules. I always refer to the rules pretty much on every diagram that I do as well. It's kind of hidden, but if you listen the whole way through, you will just gain a much, much better appreciation, and it will help you to become more of a financial blessing to yourself and others. Let's have a look at Dogecoin. Doge is currently trading at 24.664, above support at 23.393 and 22.200. Immediate resistance is 25.735 and 27.989. If we look at the fingerprint of Bitcoin across all alts, it's playing out here, but it's a little bit different. The McDonald's is squished and elongated up to the structural resistance here. The W is flatter. You see that? The normal distribution, or the bell, there's like a half of it, and this is squashed down. This is really fascinating. Something's going on here under the hood. That, to me, I would put that on a watch list and try and dig in to try and find out what's going on there. Let's have a look at XRP. XRP is currently trading at 67.96. XRP's current price is just below that structural resistance at playing at around 70 cents. When XRP gets above 71.49, that's looking fantastic. It has also good support at the 63.17 mark and 65.60 as well. Let's have a look at Luna. Luna is currently trading at 6.369. Look at that pattern. It's fantastic. I pointed this one out in the last episode. It's got strength. Look at this clean air above that trend line. This is always what you're looking for. Even though the McDonald's symbol here was squashed, the W was elongated, the bell came down and then just reflected up hard. You see, that shows you power. This is really what you want to look for. I cover so many coins because I want you to see inside, not just your coin, but inside the whole crypto market. Luna has support below at 6.214 and 5.920. The next real levels of resistance are 6.79 and 7.368. Let's have a look at Polkadot. Dot is currently trading at 15.815, above support at 15.357 and 14.748. It has immediate resistance at 16.441 and 17.297. We can see the McDonald's, we can see the upward V, we can see the normal distribution, but it's different, isn't it? It's showing power here, but weakness then there. This is really an interesting one. Please keep your eye on DOT. I have a feeling it's going to blow. It's a long way under this structural resistance here. There's all this fresh air here. I think keep our eye on this one. I mentioned earlier that we would actually add to episode 93 on the structural support and resistance. Let's get into that. In episode 93, I took it very slowly how to draw these structural lines. This, if you've watched episode 93, you will already know how I've done this. You will know how I've done this one. And you will know that none of these lines up here gave us any real signal. This is the first one that did. This is on comp. So comp is currently trading at 342.78. It's one of the big gainers at the moment. It's really fascinating stuff, isn't it? When we look at the heavy support lines, heavy support, heavy resistance lines, it's actually comp is coming up to one at the moment. Now what we do, we're starting on the daily. We're going to zoom into the 15-minute to get a much better appreciation. Okay, now you can see comp is trading between, look how price magnetized itself between this line and this line. What do you think will happen when comp comes up to here? Do you think it will just slice through it like it's not there? Or do you think price is moving in a wave and maybe it will hit resistance and back off to that current support at 349? Let me know in the comments what you think. We always start on the higher time frame, for example the daily, and we seek to go in and actually understand how price is playing out there. Then we can go to, for example, the 15-minute and have a look at how our lines are reacting to price. I'll take you through just a little bit more each episode to try and help you to build your skills up. I hope this has helped. If we think about this particular pattern and we want to draw a line, we don't really have too much to draw our current line on, do we? Its price action is over here, but the structural line actually explains price better than any line we would draw in. So we don't worry too much about that. We would look down towards the bottom and try to seek a level of upward support here. We see the McDonald's M, we see the elongated W, we see the bell, but notice the distortion. The edges of the bell are just all up and they're all down. Between these support and resistance lines, don't forget there's a lot of structural support here. That's probably the thing that's pushing this price upwards. And then the fact that there's structural resistance is also pushing it downward. The best thing that we can really do in this particular case is draw a line down here, a tight resistance line. We know it's already broken, but that gives us a guide. Maybe one more thing that we could do is to go from, say, here, looking for an up channel of support from that bottom to that. Note this fresh air even more. I would anticipate if I was in comp, I would, and I wanted to buy now, for example, I would layer my trades because I know that this resistance is typically hard to get through. Now, layering your buys is something that I'll talk about in other episodes, but it's always buying at support or in between support. Now, if it was in between support, what would that look like? Let's just go across to the tool and figure out. You know that there's a lot of resistance that will turn to support. Support lines and resistances turn on each other. So what was once resistance, when passed, turns back into support. So you could say, I'm going to take out a level of comp, a percentage of your trade where you are. It always depends on your fees as well. Just be aware of that. Couple of things, don't buy at market is a very, very important trading rule. It will cost you a fortune over the long term. You notice this particular resistance here, I would just probably go midway between these two if I was entering comp. So we could have a buy order there. You could have one up there, just a percentage, another one here, another one here, another one here. Remember, price is negatively biased. You could get a offshoot coming down here, but you always know we have to keep our eye on Bitcoin. It's absolutely critical to understand how things work. And it always depends on how much you're putting into a coin. If you're putting in $10,000, you could afford 10 layers down because that decreases your overall buying price. If you're putting in $500, you might do 5 different levels. There's nothing stopping you from being an artist. You can put levels between your levels if you want. The key is just to be consistent because you really want to learn what you're doing. I always love to put price captures down, like trades down below the current market price like this. This is my own personal preference. Now, why do I do that? I do it because I know price is negatively biased. Fear is a disproportionate response, and I know price is always moving in a wave. It's going up and then it's going down. It's going up and going down. It's very normal. Think of the McDonald's. It's kind of like that. We might get a McDonald's arch in here. We want to take advantage of those things. I hope this has helped. I hope you found the content useful. Everything I do for you is free. Please be aware of scammers. I do these videos to assist you to be more of a financial blessing to yourself and others. Please say hi and let me know where you're viewing from. I'd love to hear from you. And of course, I really appreciate all the questions you put in the comments. It's much appreciated. If you would like twice daily updates, 7 days a week on price movements in the crypto market, please subscribe to me on YouTube and follow me on Twitter. Crypto is volatile. Always prepare yourself for the best and worst case scenarios. reality will likely be between them. Stay safe out there, take care, and see you next time. Bye for now.